Okay, we will start with a new module, that is tax. Okay, so we will discuss about taxation. So here I will start with the few terms. So what do you mean by tax? You can just write one line. It is a compulsory payment to government. It is a compulsory payment to government without any consideration. Without any consideration. So what do you mean by this? It is a compulsory payment. That means you have to compulsorily pay. You cannot get away from this, and there is no other consideration. That means even though you are paying to government, there is no obligation from the government side. For example, you say you are paying house tax. Okay, so you are paying house tax, and just because you paid house tax, it is a compulsory payment. And why it is without any consideration? Just by paying house tax, you cannot demand the government that you have to construct a road in front of my house, right? So that is not possible. That is why tax is considered as, it is without any consideration. It is a compulsory payment to government without any consideration. So second term you can write as surcharge. Surcharge, it is technically not tax. Some people will say tax on tax, etc., but technically it is not tax, but it is an additional charge. Just write one line. It is an additional charge. Additional charge. If you want, you can write in bracket tax. So because some books or some people will say tax on tax. So why it is additional? Because it is over and above this tax. Okay, so that is why this is again a tax. So tax on tax, some people say, but just write it is an additional charge imposed on tax. Imposed on tax. Now why it is done? It is basically done as a it's a method of raising revenue temporarily. So you can write one more line. It's means of raising revenue temporarily. Okay, so this will be imposed other than the normal tax slab. So what is a normal tax slab? If you see 0 to 2.5, there is no tax. Okay, 0 to 2.5 lakhs, there is no tax. 2.5 to 5% tax. So how much you need to pay? This 2.5 was actually exempted. If your income is 5 lakh, the first 2.5 was exempted. The next 2.5 you need to pay at 5%. That means you have to pay 12,500 here. And then 5 to 7 or 5 to 7.5 lakh, it is 10%. So if your income is 7.5 lakh, then in this, the first 2.5 was exempted. Okay. And then next 2.5 will be charged at 5%. That means 12,500 you need to pay. And next 2.5 will be charged at 10%. So 2.5, 10% means 25,000. So if your income is 7.5 lakh, you need to pay how much? 37,500 as a tax. Now 7.5 to 10 lakh, it will be 15%. Okay. So if your income is 10 lakh, then the first 2.5 was exempted. Okay. So if you divide this 10 lakh, the first 0 to 2.5, it is exempted. Then the next 2.5, that will be charged at 5%. So you have to pay 12,500. The next 2.5 will be charged at 10%. So you have to pay 25,000. So first you have to pay 37,500, and then this 2.5 lakh will be calculated at 15%. Okay, so that will be around again 37.5%, thousand it will come. So this is what you need to pay in case your income is 10 lakh. So I hope you understood this calculation. This is based on the new tax slab. Some tax concessions will be there that we will discuss in the coming session. So I hope this is understood. The first 2.5 lakh, no need. But when we discuss about surcharge, means over and above this, you will have to pay something extra, and that will be charged upon the super rich people only, and it is a kind of wealth tax. So when we discuss about different direct tax, I will discuss what is wealth tax and why it is abolished, and why surcharge is actually acting as wealth tax, I will discuss that. Okay, so it just understand it is an additional duty or it is an additional charge which is imposed on the regular tax. So this is the regular tax, and this is we are talking about income tax. In the context of income tax, it will be applicable in the case of companies also. So when we discuss about companies, their income tax is the corporate income tax. So for companies also, the surcharge will be applicable. What is surcharge? It will be an additional charge upon the tax. Okay. So then third point you can write, third term, that is cess. It is again an additional tax only, additional charge only. So just write one line. It is an additional charge. It is an additional charge on a tax. It is an additional charge on a tax which is imposed to finance a specific activity. To finance a specific activity. Okay, so you will see Swachh Bharat cess, okay, Krishi Kalyan cess, etc. So it is basically to finance a specific activity which will be imposed upon the tax. Now, next heading you can give us the types of taxes. Different types of taxes. The first one, proportional tax. Proportional tax. Okay, so under this you can just write one line, then I will explain. Under this, tax rate remains same irrespective of the income. Under this, tax rate remain the same irrespective of the income. So it will go like this. So here taxable income, okay, and here it is tax rate. So the tax rate remains same. For example, let's say flat corporate income tax at 30%. It doesn't matter what is your income, it will be flat. For all income, the tax rate will be same. That is what proportional tax. Okay, so for 1 lakh, 2 lakh, 3 lakh, the tax rate remain the same. Second, you can write progressive tax. This is what we are following. Progressive tax. Under this, just write one line. Under this, the marginal tax rate increases with increase in taxable income. The marginal tax rate increases with the increase in taxable income. So here you will see the taxable income, okay, just like before. And if this is tax rate, so this is how it will go, right? So what you can interpret from here, see here at this point, income is less. So you can see here the tax rate is low. When income is high, the tax rate is high. So low income, low tax, less tax, high income, high tax. So you can write there, for example, income tax. We are following this, no? Income tax. So in case of income tax, just before I have told you, there is an exemption till what? Till 2.5 lakh, there is an exemption. There is no need of paying tax, right? So if your income is up to 2.5 lakh, exemption is there. Then what we have seen, 2.5 to 5 lakh, what percentage? 5%. 5 to 7.5 lakh, what percentage? 10%. Then 7.5 to 10 lakh, it is 15%. So what you can see here, the taxable income is increasing, the tax rate is also increasing. So the tax slab is changing. So this is what progressive tax. Okay. So proportional tax, it remained the same, the flat. Now progressive tax, you can see here, this is a progressive tax. So for example, if your income is, let's say, if your income is 7 lakh, so how will you calculate the tax for this? If your income is 7 lakh, for the first 2.5, do you want to pay tax? No need to pay tax. So first 2.5 is exempted. Then 2.5 to 5 lakh, how much you need to pay? At what rate? 2.5 to 5 lakh, you need to pay at 5%. So how much you need to pay? You need to pay 12,500, right? Then the balance 2 lakh, that is 5 to 7, right? This is the balance 2 lakh. That will be taxed at 10 percentage. So 10 percentage of 2 lakh, that is 20,000. So how much you need to pay in this context? 32,500 if your income is 7 lakh. Okay, so that is how it is calculated. Third point, you can write regressive tax. Regressive tax. Just write one line under this, the marginal tax rate decreases with increase in taxable income. That word itself will tell you, right? So here, if this is your taxable income, marginal tax rate, the tax rate, what will happen? Will decrease. It will be similar to what curve that we have discussed? Demand curve, right? Downward sloping. So the marginal tax rate decreases with the increase in taxable income. So you see here, income is high, so tax is very low. Income is low, but tax is high. Okay, that's why we use this term regressive tax. So that's about the third point. Fourth one, degressive tax. Degressive tax. Okay, just write one line. It will be like this only. So it is actually combination. Okay, so up to certain limit, it will increase based on the income. For example, this is tax rate and this is your taxable income. Up to certain amount, so it will increase. It's like progressive. Then it will be constant. Like then it will act as a proportional. So it is combination of what? Progressive as well as proportional. So just write one line here, degressive tax. It is a type of progressive tax. It is a type of progressive tax under which the marginal tax rate increases with increase in taxable income. As you can see here, the marginal tax rate increases with increase in taxable income up to a certain limit. That means up to this point, and then it becomes constant, as you can see here. Then it becomes constant. Okay, now other terms you can see here related to, you can write tax deduction. Tax deduction. So tax deduction is nothing but your taxable income. Okay, so here your taxable income will be equal to total income minus tax deduction. So this tax deduction can come in the form of certain loans like educational loan or investment linked deductions. For example, the section 80C, okay, that is related to investment linked deduction. You can write investment. If you take a policy, if you take a if you have housing loan, etc., some deductions will be there. So this is connected to investment linked deduction. So there is a ceiling for this. Ceiling is 1.5 lakh. 1.5 lakh. Okay, for example, if your income, let's say your income is 7 lakh, as we have discussed in the previous case, but out of the 7 lakh, you are investing, for example, fixed deposit or PF. Okay, there is a investment of, let's say, there is an investment of 1 lakh, which comes under this category. Okay, it could be LIC or any policy or any investment which comes under this. Then what is your taxable income? The taxable income in this context is 7 lakh, which is your income, minus the 1 lakh investment. So your taxable income is how much? 6 lakh. So your taxable income is calculated after adjusting it with the tax deduction. Tax deduction with respect to this. So now 6 lakh is the taxable income. Earlier you were paying how much? 32,500 as the tax. Now how much you need to pay? 0 to 2.5, no need to pay. 2.5 to 5, you need to pay 5%, that is 12,500. And then only 1 lakh you need to pay. Only 1 lakh you need to pay at 10%, that means 10,000. So now new tax is actually 22,500. And if this investment is not there, you have to pay 32,500. So by investing in that instruments, actually you can save investment linked deduction. If you can use, you can save that 10%. Okay, so this is one important thing that you need to discuss. Then tax rebate. Tax rebate. So it will be directly deducted from tax liability. So for example, you will calculate the tax. Okay, so for example, income tax up to 3 lakh. Okay, income tax up to 3 lakh, the tax rebate is 2500. Let's say if I am saying income tax up to 3 lakh, 3 lakh of income. Okay, so up to 3 lakh income is there. How much you need to pay? You can calculate. Here the rebate is 2500. If your income is up to 3 lakh, the rebate is 2500. Now you calculate how much you need to pay for 3 lakh. 0 to 2.5 lakh you don't want to pay. Then 2.5 lakh to this balance 3 lakh, right? This you need to pay at what percentage? 5%. So this is 50,000. You need to pay at 5%. That is 2,500, right? So you need to pay 2,500. But up to 3 lakh there is a rebate of 2,500. So do you want to pay anything? No, it will be directly deducted. That means effectively, even though if you see the slab, it's up to 2.5 lakh, there is no tax. Effectively with this rebate, you don't want to pay tax up to 3 lakh. Okay, so effectively up to 3 lakh, there is no tax. Then impact of tax. Next term, impact of tax. Impact of tax, you can just write one line. I'll explain this. Point of imposition. It is a point of imposition of tax. It is a point of imposition of tax. From whom the tax is imposed. Point of imposition of tax. That means the person or the firm on which the tax is imposed. So upon whom the tax is imposed. That is what you mean by impact of tax. Okay. So upon whom it is imposed, whether it is on the firm or the person upon whom the tax is imposed. So impact of tax means imposition. Second concept to write. After discussing the second concept, I'll discuss the relation between the two. Incidence of tax. Incidence of tax. So incidence of tax is actually the final burden on tax. Final burden of tax. So upon whom the final burden is there. Okay. So here now if you take this example, government imposed tax on whom? Shopkeeper. Okay. So if government imposed tax on shopkeeper, let's say shopkeeper. So when we discuss about the impact of tax, impact of tax is where? Impact of tax means upon whom it is imposed. So impact of tax is actually shopkeeper. But what the shopkeeper will do? He will collect it from the consumer, right? He will collect it from the consumer. So incidence is on consumer. Now you see there is a problem here. If you go with the word meaning, then it will be entirely different. See, if you go with the word meaning, who's having the impact of tax here? Actually, consumer is paying the tax. You may think that he will be impacted. If you go with that word meaning, who's having that impact? If you see, or who will be impacted with the tax, it is a consumer because consumer is paying. But don't go with the word meaning. Here, impact and incidence, understand in this way. Impact means upon whom it is imposed, that is shopkeeper. Incidence, it is a consumer. But if I ask you who's having maximum impact on tax, it is a consumer. Or who will be impacted on the tax, it is consumer. But that word meaning you don't take here. That make you confused. That's why I'm making this example here. Impact of tax means upon whom it is imposed. Incidence means who's taking the final burden. So I hope this example will make it clear. Okay. Now see here, one more thing is there. If this actually the burden is on whom? The burden is actually on shopkeeper because government imposed the tax on shopkeeper. So effectively the burden should be on the shopkeeper. But what the shopkeeper will do, the shopkeeper will pass the burden to the consumer. Now, will it happen in the direct tax? Like direct tax means what? In income tax, etc. That A need to pay the income tax. I need to pay the income tax. Can I pass it on to you? Is it possible?
No.
No. So this will be possible. Yeah. So in case of indirect tax, this tax burden can be transferred. But in case of direct tax, the tax burden cannot be transferred. I have to pay the tax. I cannot pass it on to you. Okay. So that is the case. I hope this is clear. So in case of direct tax, can I say the impact and incidence will be on the same person? Yes. But in case of indirect tax, I cannot say that. Okay. The shopkeeper can pass it on to the consumer, and mostly that will be done. That will be the case. So this point has to be very clear. Impact of tax means upon whom it is imposed. Incidence of tax means who is having the final burden. In case of direct tax, the final burden and also the impact and incidence will be at the same person. Indirect tax, that may not be the same. Or let me make a difference between direct and indirect taxes. We will discuss now this. Direct taxes and indirect taxes. So just write one line under direct taxes. These are imposed on income, wealth, and activities of individuals and firms. Income, wealth, and activities of individuals and firms. Examples you can write: income tax, corporate income tax, wealth tax. Wealth tax is abolished now. We will discuss all these. Okay. So all these you can write: professional tax, etc. Income tax, corporate income tax, etc. So it is imposed on income or wealth and activities of individual as well as firms. What about indirect taxes? Just write one line. These are imposed on goods and services. These are imposed on goods and services in the stages of production and distribution. In the stages of production and distribution. Okay, these are also called as product or commodity taxes. Product or commodity taxes. Okay, so here income tax, corporate income tax, wealth tax, you can see professional tax, land revenue, house tax, property tax, everything will come here. So here this upon goods and services. For example, on production, what tax? Excise, right? And on distribution, it is sales tax. Distribution of goods, you will see sales tax, custom duty, and upon service also service tax, entertainment tax, all these will come here. We'll discuss about GST. Then again you can write here in the direct tax, under direct tax you can write one point: the burden of direct tax cannot be shifted. So now I hope you can understand that point. The burden of direct tax cannot be shifted. Cannot be shifted. Here you write the burden of indirect tax. The burden of indirect tax can be shifted or not? It can be shifted. You can write the burden of indirect tax can be partially or wholly shifted on others. Okay, so it can be partially or it can be completely shifted to others. And here you can write under direct tax, you can write usually imposed on progressive basis. Usually imposed on progressive basis. I've told you what is progressive tax, right? So income tax will be usually imposed on progressive basis. But here, in case of indirect tax, it is imposed on proportional basis. It is imposed on proportional basis because it will be flat, no? But actually, it is regarded as regressive in nature. It is regarded as regressive in nature. Why it is regarded as regressive in nature? Because the poor person also need to pay the same tax. So in that context, it is considered as regressive in nature. Now, how can you make it progressive? Can you make it progressive? You can actually make it progressive. How can you do that? Some products like luxury cars, what you can do? You can increase tax in case of luxury cars. In case of cycle, you can decrease tax. So like this, you can make it progressive also. But generally, it is proportional. But it is regarded as regressive because the poor is also paying the same. So it is considered as regressive in nature. Okay. So these are the important terms related to tax. So we are going to start with the module now. Before that, I want you to know all these terms. So I hope these terms are very clear. So we discussed with what is tax, what is cess, what is surcharge, tax deduction, okay, and tax rebate, and all the different types of tax, etc.